Wall Street closed lower on Thursday, dragged down by tech and other megacap shares amid fresh signs the Federal Reserve could keep interest rates higher for longer. The Dow dropped about 0.75%, the S&P 500 shed nearly 1.2%, and the Nasdaq plunged 1.75%. The Nasdaq was weighed down by the Magnificent Seven group of momentum stocks in the face of murky earnings guidance and a high-rate environment.
The market is reflecting disillusionment.
George Ball is chairman of Sanders Morris Harris.
It's reflecting both disillusionment in the slow rate of growth in their revenues on the one hand, and some degree of realization that the nearly 25% increase in the NASDAQ, driven entirely by the Magnificent Seven, may have been overdone. So one dose of reality, one dose of disappointment, and that's what's driving the tech stocks and the market down today.
A swath of robust data on Thursday included a 4.9% quarterly annualized jump in third-quarter GDP, the strongest reading in nearly 2 years, feeding investor worries about restrictive Fed policy. Among individual movers, shares of Amazon rose more than 3% in extended trading after the e-commerce giant reported better-than-expected quarterly revenue. Meta Platforms beat third-quarter revenue and profit expectations, but said spending next year will exceed analysts' forecast and suggested the Israel-Hamas conflict could dampen fourth-quarter sales. Its shares fell more than 3.5%. From the Magnificent Seven to the Old Guard, IBM jumped nearly 5% following its consensus-beating quarterly report. And UPS lowered its revenue forecast for 2023, sending its shares down nearly 6%.